Hello, everybody, and welcome to the market briefing for the week starting November 21st. In today's video, we're going to take a look at the earnings season's winding down, so there's not a whole lot of earnings this week. Macro, we've got Fed minutes coming. That's going to be really important. People will be looking at that closely. So we'll get into that a little bit. The markets themselves, lots of indecision over the last week. It kind of looks like indecision moving forward as well, unfortunately. Breadth is still improving, so that's nice. We'll take a look at a couple of breadth metrics that will look somewhat pleasing. In the markets, when we take a look at markets, we'll see lots of bull flags, and we'll also see lots of bearish RSI divergences. So again, it goes on that theme of being indecisive. And there's actually some pretty decent setups, both to the short side and the long side. So we'll be looking at Tesla, DraftKings, Boeing, Google, and a couple more as well. And yeah, hopefully there'll be a nice setup or two for you guys in there, something that suits your eye and not just mine. Okay, so let's go ahead and smash that like button, and we can move on. All right, everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. All trading and investment decisions are your own and done at your own risk. So let's start by taking a look at our earnings calendar, and you can see not a lot. There's a big gap towards the end of the week. On Monday, tomorrow morning, before the open, I think the most interesting one there is probably Futu. On Monday after the close, Zoom will obviously be very interesting and closely watched. Dell Technologies a little bit, I think. On Tuesday before the open, I kind of almost wanted to highlight that whole strip there before the open. There's a lot of closely watched names. Dollar Tree, Best Buy, Dick's Sporting Goods, Baidu, Canadian Solar, even Analog Devices and Medtronic and Burlington and ANF and Jack in the Box. Lots of big names, or not big names, but important names on Tuesday. So a lot of stuff that's going to be watched closely. So it should be some really interesting plays in there for the day traders. After the close on Tuesday, we have Autodesk, Nordstrom, and a couple of other interesting names. And then on Wednesday before the open, we have John Deere. That's in the industrial sector that has been outperforming everything. So that could be interesting. And that's pretty much it for the rest of the week for earnings. Now, let's move on to our macroeconomic calendar. On Monday, we've got nothing. Calendar's completely empty. On Tuesday, we've got the Richmond Fed Manufacturing Index. That's fairly important. There's also a bunch of Fed speak on Tuesday. On Wednesday, we have the Flash Services PMI and the Flash Manufacturing PMIs. We also have FOMC meeting minutes from our last Fed meeting. So traders are going to be watching this very closely, poring over those minutes, looking to see, and the consensus really, I think the thinking is that the Fed basically pivoted at this meeting but didn't say so. There's a sense among some really smart people that a lot of the Fed heads are sort of breaking ranks a little bit with Powell and think it's time to slow down on these rate increases. And we'll probably get a hint of that out of these minutes. So that's going to be really important. That'll be really close to watch, and that could really kick off a huge rally. Now, these don't come out until late in the afternoon, unfortunately. 2 o'clock, I believe it is. And, markets are closed on Thursday for Thanksgiving, for U.S. Thanksgiving. So, there's not a lot of time for a nice big rally to start. And on Fridays, markets, or on Friday, this coming Friday. The markets close early on Friday at 1 p.m. Eastern. So this is going to be a really interesting week. Also, this week tends to be, seasonally, is a very strong week. I think this week is up like 68% of the time. If you look at sort of the day-to-day as this week goes on average, Monday is usually a bit of a down day, a better day on Tuesday, kind of a recovery day on Tuesday, and then Wednesday is usually a very strong day, and then the Friday, or the day before Thanksgiving is a very strong day, and then the day after Thanksgiving is a very strong day. So with any luck, that plays out, to its averages, and we have a nice week. All right, let's take a look at, we'll look a little closer at the market. We're going to look at some important indices, of course. We'll look at important commodities. We'll look at the sectors. We'll look at some nice setups that we've got coming up. But before we get to the charts, I've got one picture for you that kind of sums up how I feel about the market. And really, I mean, it's how the market is feeling right now, I think. And here, whoops, that went the wrong way. Here it is. This picture, I think, sums up exactly what's going on in the markets right now. Let me know in the comments if you agree or disagree with that. Can you, when you look at the markets right now, can you make a bearish case? Can you also make a strong bullish case? Because I can do both, and I'm going to be doing both in a few moments. And to be really honest, I'm not really sure which way we're going to go this week. Because I can make a case for both. So, and sometimes the market's like that, and sometimes you just got to say, you know what, I don't know. But I'm going to go look for setups. I'm going to go look for some plays. I've got my plan, and I can play this both ways. So hopefully that comes across in today's video, and you can come up with some plays as well for playing both long and short this week. All right, so let's get into our charts. Let's start with the S&P 500. We'll look at the SPY ETF. And you can see, I mean, this past week, if these 6 candles right here don't say indecision, I don't know what does. But in that indecision, we're drawing a bit of a messy bull flag. So that's good, right? We expect a bull flag to break out to the upside. So maybe that's what we get. However, if we don't break to the upside, when everybody's kind of expecting us to break to the upside, when we're supposed to be having this, one of the best weeks of the year, if we do not break to the upside and rather break to the downside, it could get pretty ugly in a hurry. We do not want to see, a break below this 388 important support. It could really gain some momentum on the downside if things start breaking down and not playing out the way it kind of looks like they should. Let's take a look at the Qs. So looking at the NASDAQ here, you see much the same thing, right? Very indecisive week, a little bit of a bearish week. Q's down, or Q's pretty much actually just flat on the week, but this looks more bearish than bullish, right? But that's what you get in a bull flag. You get a pullback in a bull flag, and then you break out the upside of that. So we see that forming here, and we do see, in all these indices, we do have pretty decent support below, so it's not all bad. IWM was the weakest of them this week. But it did kind of, it poked below this trend line again. I should probably move this trend line down, I guess. Poke below it and jump right back up into it. Did that right at the 100-day moving average and the 21-day moving average. So that's bullish right there. But as far as, bull flag on this one goes, this is just too messy for me to even consider this price action a bull flag. Okay, let's move on to the volatility index. So here's one of the things that is kind of showing us, some bullish price action. We came, after a big move down a number of days, or the previous week, We kind of bounced up. We threatened this downtrend line, but you can see we've got these selling wicks on it, right? Every time we would go up and touch that downtrend line, we had some nice selling wicks. The VIX pulled back like it's supposed to do. And, we had a nice red day in the VIX on Friday. So we're going to be watching this level here. This level here is the lowest we've been in VIX since, when was that? Earlier in September. We're threatening that level now and, looking to come down to the gap here. This is the kind of price action we want to see when things are a little indecisive. But it's still, continuing its way down. Let's look at the 10-year yield. So as equity indices are drawing bull flags, and a number of equities are also drawing bull flags, we'll look at some of those in a bit. Our 10-year yield is drawing a bear flag. It's only 2 days long, the consolidation on this flag. So it's early yet. However, we do expect to see this break to the downside. And if yields are coming down, then equities are probably going up. Let's take a look at the dollar index. And you can see we've got a bit of a messy bear flag going on here on the dollar index after a really nice move down. Indecision again. Pretty much sideways action, kind of choppy, just like the equity markets. But this is a pattern we expect to see break to the downside. Let's take a look at our dollar cost averaging system. That is on the SPY is still showing green. We're still good to average in, but we're under threat a little bit, not from the MACD, but from the 20-week moving average. Is threatening a little bit here, and if we do move down this week, then this probably turns off again, and this would have been a little fake out in the turning on. You can see that. Whoops, that's not what I meant to do. I meant to go QQQ. In the Qs, we never did turn fully green, even though this green line here, represents the MACD crossing over. But we have not moved back above that 20-week moving average yet. You can see we've actually, met some resistance there. IWM, though, is still green on our dollar cost averaging. Looking fine here, finding support at that 20-week moving average. Okay, let's look at some breadth. Let's go here. Okay, so let's look at our, so this is a percentage of all stocks above the 50-day moving average. And you can see that has been moving up nicely, taking a little break over the last few days as we consolidate in those flags. But it would be interesting to see if we can rally, this will go up even higher. One of the other ones I find quite interesting right now, because we are right or have managed to pass above a really important inflection point. This is the percentage of S&P 500 stocks above their 200-day moving average. So this is one of those measures that tells you that you are in a bear market or you are not. The 50% level is a really important inflection level on this breadth measure. As you can see that once we move to one side of it or the other, we tend to spend a fair bit of time on that side of it. So really good to see this finally move back up above the 50% level. We've now got about 54% of S&P 500 stocks are above their 200-day moving average. And this is a level we haven't been at since the end of March. And remember, the end of March is when things really started to fall apart on us. So it's good to see us back up here. And this is, this is one of the things that is putting horns on that bear that we looked at earlier. All right, let's move on to some of the important metals we watch. And this is gold, and you can see that this is rolling over. This came up and threatened that That 1800 level didn't quite get there and has started to roll over. It looks like the next level of support, I mean, we could have some minor support in here at around 1740-ish, or down at the 100-day moving average and the 21-day moving average down here in around 1720 for gold. The minors aren't interesting at all. Silver is also rolling over, but potentially at support here. We've seen this 2085, 83, 85 level act as both support and resistance a number of times in the past, and it looks like it's acting as support again. It would be good to see this roll up a little bit here. Copper. We were really interested in copper. We were wanting to see it, the base extend. It didn't, and we got kind of what we expect. When you get a big breakout from after a big move, we kind of expect to see failure of that breakout move. And that's exactly what happened, and we've come right back into this area where we were wanting to see this base. Let's see if we can base in here again and make another try at moving out of this area. You can see we have stopped right at the 21-day moving average, or I shouldn't say stopped, paused for now. There does seem to be a fair bit of momentum to the downside here, so it's tough to say what's going to happen with copper. And the reason for all this in copper and the other metals coming down like this is, I think, China and their COVID situation. Even though they're kind of backing off from the zero tolerance on, or COVID zero, I should say, they are making moves to back away from that. And while that's happening, COVID infections are really increasing rapidly there. There's fear in the market that we're going to see more slowdown in China and the Chinese economy. And, we're seeing that not only in the metals, we're also seeing that in the energy trade as well. So let's look at our overall commodity index. And you can see that we have broken that nascent trend line, broken it quite handily, coming down and looking to see if we're going to fill this gap again too. Now, underneath here, we do have some fairly major support. So it'll be interesting to see what happens. And obviously, energy is the largest component in here. So energy is going to need to turn up for this to turn up. Speaking of energy, let's take a look at crude. So crude is having a rough couple of weeks. We did get a nice potential reversal candle on Friday, although this candle is still quite red. It did happen at this $80 level for crude. That's an important psychological level, of course. And as we move down further, the 76 level is going to be, you can see this pivot level here. Let's actually just change that over. We'll be watching this pivot level here around 76, 77 area. And we got a bounce right near there. So this is hopeful for our energy trade. But as you'll see when we dig a little deeper, we're going to see all sorts of bearish RSI divergences in that space. Natural gas, on the other hand, has been consolidating in here. And maybe putting in a bit of a tighter consolidation in this consolidation area. So building a bit of a base, which is kind of what we need to see after we've had all this volatility. And it's nice now to see this volatility pulling back a little bit. It still has an ATR of 9% a day. That's the average move you can expect in a day out of natural gas. But that's actually declining. You can see that's this teal line here. And you can see that was up quite a bit higher than that just recently. XLE, our energy sector ETF. You can see we came up to that all-time high and started to roll over. A little bit of volatility going on. Potential bounce here and reversal candle right off the 21-day moving average? Maybe. But one of the things we need to watch out for here is this RSI divergence. And I called this out midweek when we started to roll over here. I called this RSI divergence out in the Discord. If you're not a member, there's a link. There's a link down below in the description if you're watching the video. You can join the Discord and get these alerts a lot sooner. But call this out that I'm trimming or was trimming my energy positions. Decided it was time to take some profit off the table here. Don't like this RSI divergence. Don't like some of the short-term macro to do with energy, and that would specifically be China. In the longer term, though, I still think we go higher in energy into the end of the year. I think that any portfolio managers who don't have energy trades in their portfolio, we're going to be adding them in towards the end of the year. As window dressing on their portfolios, because if you don't have energy in your portfolio, your clients are going to be asking why. Why don't you have the sector that has by far been the strongest all year long? The only one of two sectors that's actually green on the year. Why don't you have that in your portfolio? So I think we could see a pretty strong rally in the energy space going into the last couple of weeks of towards the end of the year. I also think that, and it'll be really interesting to see now that energy or oil prices are coming down. Do they start refilling the SPR? And we might find that out on Wednesday. Actually, I need to check the calendar and make sure we still get with the holidays and everything. I'm not entirely sure we get crude oil inventories on Wednesday. But we should. That's when they're usually scheduled. So it'd be interesting to see if they start refilling the SPR or if they're still drawing it down. So a lot of stuff sort of in flux on the energy play right now. And, even if this bounces up from here, and there was a possibility it could just say RSI divergence, who cares? Let's go. And I'm still, even if that happens, I'm fine with having taken some profit off the table here. I may add back into some of my trades. We'll see. I just think there's. I think upside. If it does move to the upside, it's going to be a slow move. If it moves to the downside, it's going to go down quickly, and that's why I took some profit off. All right, so XOP, almost exactly the same thing here. It's sort of rolling over, but potential reversal candle here on Friday. We have to watch out for that RSI divergence. We've got much the same thing going in the oil services ETF. That nice reversal candle. I mean, this one really looks like a hammer here, doesn't it? But RSI divergence. 10, we'll look at the solar. This isn't looking too bad. Continues to be really volatile, of course. And some of the names in here kind of looking okay. We always look at FSLR. Oops, FSLR. You can see that is broken out of this level we're watching. So congrats if you're in this one. And ENPH is another one that we look at quite often when we're looking at solar. And this hasn't broken out yet, but looks like it could be threatening to break out. Okay, where to next? All right, let's look at some sectors, some of the other sectors. Consumer discretionary. It's messy, ugly, weak. But probably consolidating sideways here. You can see that this downtrend we were looking at, it broke that. Maybe that was sort of bouncing off that. I'll just leave that trend line there one more week. XLI, the industrials, one of our stronger sectors. Still basing up here. It looked like it was gonna, it kind of fell out of that base on Thursday, but reversed right off this trend line and back into our base here, threatening to break out to the upside of that. And we've got a nice little industrial, found a decent setup in the industrial space, one that I like. So we'll look at that in a few minutes. Financials. Financials are another, sector that is showing some relative strength. Kind of broke the uptrend here. Let's adjust this one now. We adjust that. I guess we should go to there. Kind of basing here a little bit. Sort of a bull flag. A little bit messy for my liking. But, you know, no reason to have a lot of fear in this space anyway at the moment. XLK, our technology sector ETF. Had some trouble with that trend line that we have been watching for ages. And also, you know, we had that gap above, so found some resistance, pulled back. You could say that's a messy bull flag. It's too messy for me to even consider it a bull flag. This is one of those areas. This is where a lot of our indecisiveness in the market is coming from, right? I mean, you know, just look at the price action on this over the last week. Very indecisive. Communications sector. This one, you know, the flag is not as messy on this. It's kind of there, you know. It's a C- kind of bull flag in my opinion, but it's still there, you know. So, you know, let's see what happens. We'll look at some of the FAANGs, and some of the FAANGs are not actually that bad. So, we'll start there with Meta. Nice move up. What was this move, like 28% or something? Really big move off the lows here. You know, kind of rolled over a little bit. Looks like it maybe wants to go sideways. This doesn't actually, you know, this looks better than it has in quite some time, right? So I do think this needs to consolidate somewhere for a while before it can really get going again. Apple continues to be a little messy, a little volatile. You know, it's hard to really see any entries or anything in here. You know, maybe if it breaks above this 100-day moving average and gets some momentum, it could break through the 200-day moving average as well. But it's not really. I don't see a play in this. Amazon's looking a little sketch. You know, I mean, consumer discretionary wasn't looking all that great. Retail wasn't looking all that great, and you can see that playing out in Amazon. You know, and found resistance right at that former gap, and you know, that pivot there. So that's not great. It looks like Amazon is coming down to you know, test this important support level. So this is, you know, this is one of the stocks that puts some check marks into the bear case for the markets. Netflix, you know, had a nice move up from coming down and sort of retesting in here, and then has rolled over again. So not sure where we're going on Netflix. It's, again, kind of indecisive. You know, it looks like we're going to come down, at the very least, test this 21-day moving average, maybe even come back down and test these lows in here. Maybe, you know, this bounces off the 21-day moving average and moves its way back up and goes to attack the top of this gap. You know, right where we are right now, kind of feels like a bit of a coin flip on this one. Google, you know what? Actually, we'll do, Google's one of the setups. We'll do that towards the end. Microsoft, you can see this one has a bit of a bull flag going on. Out of all the FAANGs, you know, this is one of the nicer looking bull flags, or this probably the second nicest looking bull flag. But it is definitely here. And if it gets some momentum coming out of this bull flag, it should be able to break through this resistance at 250. Tesla is one we usually look at now, but we'll look at that one in a little bit too. Semiconductors. Messy in here, you know, I mean, had a nice move up, broke out the upside of this upward channel, and come back, retested the upside of that channel, and now looking indecisive, you know, in around resistance. But you know, I mean, it sucks that it failed at the 200-day moving average, although we should expect that the first time it gets up there. It's nice that, you know, we're continuing to stay above the 100-day moving average. So again, more indecision going on here. AMD, you know, you can see this indecision here. That, you know, it looks very similar to a lot of stuff that we've been looking at. NVIDIA, on the other hand, is a little more interesting. You know, NVIDIA it's had a really nice move up over the last month. Rolled over just this week, but has come down and is now on Friday found support at this old gap and the 100-day moving average. So that's looking pretty interesting. I guess, you know, this gap has been filled. We can probably get rid of it now. But this is a really interesting spot here. And I think that, actually, you know what? I want to draw that line in. There we go. Yeah, I think that, I mean, this is kind of telling us that this should now turn to the upside. If this doesn't, and this breaks down through this for this old gap level here, it could be a fairly quick move down into this 130 area. So we don't want to see that, obviously. Healthcare. Taking a little bit of a break, consolidating, but had a nice gap up on Friday, and looks like it might be ready to go here. So levels to watch out here for. You know, we've got a major resistance area that we've kind of been breaking a little bit indecisively. So let's just sort of key off of that level right there. So that's going to be 135. And then obviously we want to watch out for the gap below. This little gap here. All right. So, you know, this is not a bad little setup here, I think. But I think we have better setups to play than playing in this ETF. Let's look at biotech. Biotech is once again moved down to the bottom of, hit the top of this channel that it's been in, moved down to the bottom of the channel and bounced. So we should expect this to move back up to the bottom of the channel and fail again, right? REITs came up, tried to break out of that former pivot, failed, come back in, consolidating a bit, looking a little messy, not terribly interesting. Consumer staples. These, had a bit of consolidation over the last week and a half or so, and then broke out of that on Friday. So that's a little odd. Actually, defensive sectors have been the strongest of the sectors all week, or most of this week, especially later in the week. So not surprising to see this, kind of make a bit of a move, but we don't really want to see that making a bit of a move, right? It being a defensive sector. This is another thing that sort of, adds to the whole indecisive nature of this market right now. And let's take a look at utilities. And utilities, you can see a bit of a bull flag here. Or consolidation, building a base, looking like they're ready to make a move higher. And again, being a defensive sector, these are not the ones we want to see ready to make a move higher. But let's take a look at some of our setups. Let's take a look at some of the setups we looked at last week. Schwab was one of those. We've looked at this quite a bit. It had been drawing a base. We failed out the bottom of that base, and then we gapped right back up into that base. And got up to the top of that base. This kind of feels to me like it's ready to go, and this is going to break out of here probably on Monday or Tuesday. So actually, you should probably expand this line up to here. So, you've got your breakout level there. Do you want to play it? you know, is this going to, because, you know, this, we target up here at like 95. That's a nice move, 15 bucks in this, right? And if you look at a stock like another one of the financials, a similar company, Goldman Sachs, I mean, look at the run it's had. So is Schwab going to play catch up? I think there's a good chance that it does. So definitely worth watching there. Monster is one that we started watching last week because it had been forming a little base under a major resistance level, and now look what's happening. Let's zoom in here a little bit. You know, I like to see when we've got, you know, a big wide base or a consolidation going on, and then we tighten up in the top half of that base. I really like that. You can see we kind of sort of broke out on Friday, but didn't go anywhere. I've got my alert basically set at 100, you know, because that's going to be an important psychological level. But this looks ready to go. So that's definitely something you want to keep your eyes on Monday. Canadian Solar, CSIQ. This has been drawing a base on base, another one of my favorite patterns. You know, when we get the break out of this base, it should be fairly powerful. So I will be watching that one. Okay, some new setups. I probably won't make any friends here with this first one. But you know what? We'll do a quick little lesson here. I think that's the one I want. Yes. If you're not familiar with stage analysis, showing a chart, showing you stage analysis, or, you know, market phases, is on your screen now. Now you can see in stage one, this blue area, this is what we call accumulation. This is where the smart money is buying, right? And you can see that this is mostly sideways, a very, very slight uptrend. And you know, typically this, we think that this is smart money buying because, you know, as the price goes up, well, they sell a little bit. They're not ready. They haven't finished buying, filling out their position. So they'll sell a little bit of that position, knock the price back down so that you don't get any big breakouts. And when they're finally ready, then they will allow the breakout to happen. And usually this is where I'm not going to say not so smart money, but we get retail traders in here. We get you know, other hedge funds who maybe weren't in this accumulation phase going in, and they're starting to buy in here. And we get this in stage two, then is what we call the markup phase or the uptrend phase, and we get this really nice run. And, you know, as we get towards the end of this phase, as more and more retail money is pouring into this, having seen that this is in a nice uptrend, you know, that this is making money, and you start to get these kind of blow off top type candles towards the end of stage two. All right, which moves us into stage three, which is the distribution phase. All these guys, the smart money, the institutions, the big hedge funds that were buying, accumulating here in stage one, are now selling in stage three. And they're selling to the last of the retail traders trying to get in here, you know, make some money off of this uptrend. Invariably, that fails, and we get into stage four when, you know, the last of the holdouts, you know, finally give up on this, and we get the big downtrend, and we get back to close to where we started from. Okay, so now that we've seen how our market phases work, and you see this pattern again and again and again. Unfortunately, we are seeing that in the first of our setups, and the setup is to the short side on this stock, and that stock is Tesla. This is why I'm not going to make any friends today, I think. All right, so let's do our stage analysis on Tesla. Actually, let's go to a weekly. We can see this a little cleaner here. All right. So you can clearly see we've got our accumulation phase in here, our stage one. we get our markup phase. We've moved up nicely. Good strong uptrend in this. And then that uptrend starts to kind of blow off. Look how steep the uptrend got in here. We get those kind of blow off candles, right? And now I would argue we have been in the distribution phase on this since the beginning of, or sort of the end of last year. And you can see that too. You can see that this yellow line here is on balance volume. And that is confirming, right? You can see towards the end of our accumulation phase down here is stage 1, and as we move into stage 2, you can see that on balance volume is moving up and moves up at a slower pace here as we go through stage 2. It's exactly what we expect to see from that indicator. And you can see here in our distribution phase that our on balance volume is declining but slow and steady. That indicates smart money, institutional money pulling out of this. And now I would argue that we are at the very beginning of stage 4, our decline, our markdown phase. If we move down, break down below this gap, we'll actually go back to the daily now so we can take a little closer look at this. And there are a lot of reasons for this. I think the institutional shine is coming with everything that's happened with Elon Musk and Twitter and what is going on right now at Twitter. And Elon kind of looking a little, I hate to say crazy, but yeah, I wouldn't be the only one to say Elon's looking a little crazy right now. And actually, one of the reasons I was taking a really close look at this over the weekend is because I listened to a podcast the other day with one of my favorite contrarians. He goes by the name of Cuppy. I know that some of you guys know him. He was one of the first guys. He's in a way, he's a little bit like a Michael Burry kind of guy. He is a really smart guy, and he does get contrarian, and he's usually right. And he was one of the first people, one of the first guys calling out Cathy and the ARK funds. And he did it, near the end of their uptrend, and he was bang on. And he was talking about how crazy Cathy is, how the whole thing was a Ponzi scheme. And he's using exactly the same language now when he's talking about Tesla and Elon Musk. I think that may be a little unfair, and I'm not suggesting that, it's going to be as bad as the ARK funds. But, when you look at this chart, you don't see a whole lot of support below here, do you? Once we get below kind of where we are now, and this old gap fill that goes way back to here, these areas that we're looking at, very minor support. The best one of those is probably at this 135 level, and then once we get below that, then we're down into 100. So there's a lot of potential downside here, and there's a lot of good reasons for it to happen. Tesla investors are not happy that Elon is paying so much attention to Twitter right now. Now, Elon says, of course, he's going to be hiring a CEO for Twitter, but there's a lot of pressure for him to actually step away from Tesla, from the CEO role of Tesla, and hand that off to somebody else. So I think there's a lot of reasons to see some downside here. There's a lot of reasons for the shine to come off for a while. And I'm not saying that I'm bearish on Tesla forever. This is an intermediate term play on this. And it will, if it plays out this way, it'll give us an excellent opportunity to get into Tesla at much better prices. So, that's my thesis for looking at downside on Tesla. And I am this week going to be looking at buying some longer term puts. I don't want to just short the stock. I want to have some, I want to be risk defined. because I think this when this does start to go back up again, it could go really quickly, and I don't want to be short stock when it does that. So I'm definitely going to be looking at some plays with options, and I'll let you guys know in the Discord what I come up with and what I decide to do here. So worth taking a look, I think, because I think that it could make a sudden move to the downside. It could be quite dramatic. All right, let's take a look at a long side trade, and that one is Boeing. I've been trying to find industrial trades, and I've been having trouble with that. Well, Boeing has been in a long-term downtrend here. And actually, if we go back much farther, in a very long-term downtrend. But since it's partial recovery after COVID, it has still been trending down. But in the recent past, in the more recent past, we've got what looks like a nice W bottom here, a double bottom. Draws a nice W. We've had a nice move up here in the recent past. Trend got a little bit steep and extended, and we've pulled back now and drawing a really nice looking bull flag, nice and tight. This is a decent looking bull flag, and it looks ready to break out the top side of that. It targets right up into a resistance area up at 220. We've got a minor resistance up ahead on the first move, so that gives us an initial target of about 189, 190 is the support resistance level and our downtrend line. I would certainly be taking some off, maybe as much as half off as we come into this 190 level, but I will try and hold on to some too. And if we were to consolidate here and then move higher, I'll probably add some of that back in, expecting the move to 220. So this is really interesting. I really like this play. We'll definitely be taking a breakout of here. And your risk is really nicely defined on this too. So next up is in the semiconductor space. This one comes from NS in the Discord. This to me is, so he's in this longer term. I see a very short-term play in this. I see a short-term play up to 73. It's really, it could very well just be an intraday scalp, and I'll show you what I like about. So I mean, we can see how this is on the daily chart. We had this pivot and we got right back up to it again. It's kind of better zoom in here. Here we go. We've got this bit of a you could call potential double top. But it also looks like, this is an easy breakout from that pivot right there. And when we look at the intraday chart, if we look at a 15-minute chart on this, you'll see why I kind of like this play. So moving over to the 15-minute, and can everybody see that cup and handle there? Or, well, it's not really a handle yet. We need this to form a handle. We need this to form a handle on Monday morning. So what would be really nice to see is if we open on Monday morning, and what would be really cool actually if we, gapped up a tiny bit on Monday morning, but then pulled back and, continue to draw this handle and then broke out of that handle, maybe around midday or something like that. Maybe we take all day to draw the handle. I don't think that would be good though. I think this has to happen within the first 2 hours of the day. That we draw this handle, and then as we go red to green, break out of this handle, ideally somewhere around here. You're buying it there. You're maybe adding on a little bit as it breaks out the rim of this cup, and which would be our breakout from all these levels from earlier in the day and going back a few days. Could be a really nice move, and like I said, was targeting 73 and change on that. So this, this could be a very, for me anyway, short-term swing trade. Would probably have to be in this for a couple of days to get to that 73 level, but you never know. I mean, if Monday ends up being a strong day, this could make a really strong move and get there in a day. But I'm going to be prepared to hold this for a couple of days. So that's GFS, Global Foundries. Let's go back to our daily chart and take a look at Google. So Google is setting up with a nice little tight bull flag. It's had a nice run. It's halfway up into this gap here. Pulled back for a few days. Looks ready to go. However, this could easily have another day or two inside this flag pattern. So if it doesn't break out on Monday, don't take your eyes off it. If we're still inside this flag. Because we get a nice move out of this, so our breakout point's going to be around 99.100, and we're targeting a move up to 115. That's a decent move. I'll take that, because that's probably going to happen fairly quickly, over the course of the week, perhaps. And the last one I've got is another. Can you guess which way I kind of want to play this? So this is DraftKings. Okay, you can see long-term downtrend has been, trying to base here. So, this one's a little bit indecisive for me, playing to the short side. But take a look at this 200-day moving average, right? Look at what it has done now. We have 4 clear reversals on that 200-day moving average, and we may very well be in the midst of another one right now. So looking at this, obviously, makes you want to play to the short side, right? However, this not, is this too obvious? Is the real play here to the upside? And if we do go to the upside on this, is it going to catch everybody off guard? Because, who doesn't want to go short here after seeing this? So you got to think that we are going to get some shorts, but maybe we get a reversal way before we get down to kind of the bottom of the channel. I should actually draw a channel in here so you can see this more clearly. Clearly there's a channel there. Let's move, get this sort of the bottom of the channel. Whoops. All right, fine, be like that. Sorry about that. There we go. That's what I'm after. So this is actually kind of a bit of a broadening formation here at the bottom of this channel, right? Which is kind of interesting to see. So there you go. I think the expectation is this rolls over, and that's going to be my first play on this. But I'm going to have my stops so tight on this, and I think that if I get stopped out, if I play short and get stopped out up above this 200-day moving average, I'm probably just going to flip right to long. So my stop will be, probably double whatever my position, my order that's going to be sitting there is going to be double whatever my position is, because I think that if I get stopped out in here, if this starts to move to the upside, I think I'm not the only one who's getting stopped out. I think this could make a sudden move to the upside and really kind of get going there. So this could be a really interesting play. This could be a lot of fun, this one. So that's all the plays I've got for you guys. Again, just to summarize, the week ahead that I think we've got. Go back to this picture because I'm just not sure. Like I said, bullish and bearish, and you can see I have found really nice plays to the bull side and to the bear side. So it's going to be an interesting week. There is no doubt about that. So coming up, we have on Wednesday, we're going to have Ticker Talk. And the next 2 Wednesdays, and of course we've got, our weekend briefing recording next week. So I want to thank everybody for coming out. If you've made it this far, you guys are heroes. Hit that like button, share and subscribe, and enjoy the rest of your weekend. Enjoy your Sunday evening, and have a great Thanksgiving to all my American friends. We've already had ours in Canada, but I know you're all looking forward to that turkey, and it's coming up soon. So enjoy. Thank you.